What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, what we are breaking down is some positions that we are going to be looking at opening here in the portfolio. As you can see, up a whopping $16 here, mostly because, again, I don't really have a lot of options being traded right now, and my shares are relatively not doing that much. So if you're excited for today's video and want to know what my trades are going to be, feel free to like the video and subscribe to the channel. And as always, turn on those bell notifications. Now, we're going to kind of tie in a couple things here, right? I've done a little bit more fooling around with my spreadsheet a little bit to kind of think about what can I do and what should I set my strike prices at in terms of selling cash secured puts. And what I've got, I think, is a very decent strategy to look at here. We're going to break it down by opening up a couple trades here today, and we're going to see how it goes. The first one that we are looking at is Celsius. Celsius right now is currently down 6.37% on the day. Now, could this be trying to potentially catching a falling knife in this case? Again, it was at a high of 39.67, and since then it is down close to 36, a little under $37 here. And it comes all the way down to, 36 was the low here as of last week. As of last month, because we're down about $34-ish and had a nice little recovery here. So we're looking at Celsius here. Now, again, news broke out about there being blood cancer causing ingredients that's in Celsius, I believe. Some article came out about that and about how it links to cancer and everything else of that nature, which is unfortunate, but, overall, I mean, as someone who teaches in high school, I see so many students drinking energy drinks. It's absolutely crazy. It's Celsius, it's Monsters, you name it, it's there, right? Not as much coffee as you might think. You see a lot more energy drinks because people don't like the taste of coffee, but energy drinks have the energy and also have the sparkling and they also have the fruity flavors. So, I'm someone who sees who's buying what, right? Now, taking a look at going into Celsius here, and the idea behind it is take a look at the spreadsheet as to what I came up with. Now, this grayed out column right here is what I have determined my minimum cash secure put strike price should be set at. Now, how I did this was I basically wanted to figure out what would make this 1 year, 3 year, 5 year turn green. At least make the 1 year, because if the 1 year is green and the 5 years green and the 3 year mostly will be green as well. What would Celsius have to be at? And here's Celsius right here, as you can see. I don't want you to be overwhelmed by the numbers here, but here is my Celsius, the one we're looking at. And for me personally, based off of the potential upside from 3 year and the 5 year, along with the discounted cash flow, it still is sitting at an overall potential buy. But I'm thinking that I'm like, okay, what could I do? What would be a good price to make this trade at in the green where it goes a little bit higher here? And so basically what I did was I did some sort of calculation here. I want to break it down here. But say Celsius goes to $35 a share. That puts this last one in the green as a potential upside of about 11%, which again is about the S&P 500 return, give or take, annualized per year. So not too bad, not going to mind owning it at that share price. And again, as you will see, the spreadsheet updates. And what's even interesting, the percent upside for the bear case goes to 0%. It was red before, now it's not, right? So take a look. I just undid it here. Take a look at what it was. It was down 5%. So me selling a cash secured put at $35 strike price puts this at 0 for the bear side, and the potential base case and bull side as a result. This spreadsheet has a lot of important things going on here. It's looking at two different models. Two different models are focusing on the growth through earnings per share and the PE ratio over the 1 year, 3 year, 5 year, and also looking at the discounted cash flows and how much money they're going to bring in over the next 5-10 years and what it's going to be valued at. So right now I'm setting my strike price at $35 for Celsius. It's down 6% at the time of me recording this video here. So yeah, I'm going to go into this. Why not? So we're going to hit trade, sell, put, and I'm going to give it a little bit of time here, right? Because, going 4 days is open to having more volatility. Going out about 11 days, end of next week after Memorial Day here. And what you're seeing here is, look at that. This is about a 2% return here. So $35 strike price, you're paying 70 cents here, or you're getting paid 70 cents per share in this case. And take a look at the numbers we're going to write into here. May 30th, I'm going to do a $35 put option here. And right now it's at about 70 in this case, which is great. And then look at the numbers we're getting. About a 2% return, which is absolutely awesome. And the probability of profit about 79%. As someone who is the option seller, not the option buyer, you put yourself in the house's edge, right? You have a 79% chance of this being profitable. So as long as Celsius doesn't sell off, 7%, then we're going to keep moving on. But even if it does come down more, I get it for a cheaper price. And then you can sell covered calls here. So I'm looking at selling 2 contracts here. I wanted to do 2 in this case. And we're going to do it at 0.70. So looking at about a potential 2% return here between now and next week. Now, what you will see happens here is that obviously like your collateral goes into it in this case. So we're going to hit review here. So $7,000 of my buying power of $38,000 goes into collateral. Because, again, I need to have $7,000 in case I want to buy the shares of Celsius in this case. The good thing is the delta is under 30, which means it's a pretty good delta. Usually people say about 20 to 30 is a really good one because it puts you in a good chance of it being profitable here. And so that's what we're looking up. It's coming down a little bit here. Let's do 68. Might get filled a little bit lower, but, it is what it is. Let's actually do 69 and see what happens here. Perfect timing. So let's review that. Let's submit it. Let's see if we get filled. Boom, filled. 69 cents we got filled at for each one. So again, almost a 2% return between now and next week. Now, the nice thing also, things to keep in mind about, is with the stock market, it is closed on Memorial Day. So that's something to keep in mind about. And again, what's going to be happening is I'm going to be assigned shares at $35 each. But that's good. That's what I want in my portfolio because take a look. $35 puts the annualized 1 year, 3 year, 5 year all green, which is absolutely awesome. It puts the bear case at 0% return. It's the lowest that they're basing off of calculations. And then the base case and the upside are absolutely amazing. So I am not going to complain about getting assigned at 35. Maybe get assigned at 35, then we can do covered calls. Because again, if you take a look at the options premiums here, like they're pretty juicy, right? $37. If I bought it at 36, I could sell it at 37 and make $200. Like there's a lot of things we can do here and manage the position in case things go sideways. So we shall see, obviously, as we go. So that cash goes away. Boop, boop. There you go. Upstate's in there. $7,000 put aside in this case. Some cash is still being used to get the 4%, which is absolutely awesome. This delays usually about a day or so. It says 7,000, but it's usually 30,000 we're looking at here. So that'll be a nice little return, a nice little chunk of change there. Looking at $38, not just over a week. Can't complain about that one. And then the other one that I was kind of intrigued about, which might be an interesting one for a lot of people, is Dutch Bros. So as you can see, Bros right here is down about 2.13%. Again, I have these reds, so that way I know, hey, I can start selling on the red days. You don't want to sell cash secured on the green days. You want to sell on the red days, right? So Dutch Bros is like, okay, I'm looking at the red ones here. Dutch Bros kind of piques the interest a little bit. And not only that, but take a look. It's pretty close to that minimum strike price. If I got assigned at $68 here, that puts this one basically at green. I think it's actually 67.5. 67.50 puts me at green. And let's take a look and see, go over here. And then this one goes into still overvalued by a little bit. So this one's a little more of a riskier trade here, but still puts me at 4 out of 6 potential buys here for the green. Not going to complain about that too much. And I am seeing, quite a bit of Dutch Bros popping around recently. So they could have a lot of potential there, but, why not getting a little bit of a discount? So let's go into Dutch Bros here. Let's take a look. Again, on a red day here. Didn't get at the exact bottom. This is pre-market. But, a little bit of a rally up here. Bottom's at about 71 here. The only thing with Dutch Bros that's a little different is that this one has to be a month out because they don't have as many, they don't have as big of an options chain in this case. So you have to go a little bit farther out here. But here's the 67.5 right here. Again, under 30 delta at 28, basically the exact same delta here. And we can take a look at these numbers. Let's take a look and see here. I already have it loaded up, which is great. And this is a little bit behind. Let me refresh this a little bit. Let's do it. Let's type it in manual here. So Bros. I'm going to do 67.5. Excuse me. Pardon me. And you're looking at about a 2.86% return in about a month, or annualized about 32%. I want to focus more on the annualized number being higher than about 10%. So in theory, if I wanted to, maybe we go a little bit lower to the 65. Puts me about 21%. It's a little bit more of a less risk trade and a little bit more of a chance of being profitable here. I might do the 65 because the 65 would be about a 10% drop off here. So maybe let's take a look at the 65. About 20. And again, you're looking at June 20th. So looking at a little bit of time has to go by here. In this case, actually, let's do 67.5. You know what? I want to see how the spreadsheet does. Let's test it out here. So let's do 1.85. Let's do this. Let's see if we can get filled here. Again, another 6,750 going away for collateral. And boom, we got filled. Perfect. Beautiful. Awesome. So what we're looking at now is 2 trades here. So we've got Celsius looking at $7,000 worth of collateral going in there for 2 contracts at 69 cents each. And then we've got one Bros contract being filled at 185, I believe. Yep, $185 there. Again, looking at about a 3% return in about a month. So it's a little bit under 1% a week. But again, annualized, we're still looking at, what was that number? I believe it was like 31%. So still a really good annualized return, about 32% here. Celsius, we could take a look, and we bought 2 of these contracts at 0.69, which is absolutely awesome. That's a huge return. Look at about 60% annualized here. So this one might have a little more volatility to it. So we shall see how these trades do here. Again, it's kind of walking you through how the spreadsheet and how I'm using it here. So again, if Dutch Bros comes down to 67.5, again, we'll have a hopefully potential upside of 10% for the 1 year. Still 31% in the annualized, which is crazy. And then 48%. So this is a more of a growth stock that we're looking at here. Base case, about fair value, which is pretty good for me. Bull case obviously would be absolutely amazing, but the 67.50 strike puts me in the green for Dutch Bros, which is good. Again, having 4 out of 6 green here is what I'm looking for and how many is the spreadsheet here. So hopefully you guys enjoyed this video. If you made this from the video, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications. But yeah, we just looked at offsetting, about $13,000 in trades here for cash collateral here. So potential upside again, obviously we're looking at about a little over $300, which is absolutely awesome. So stay tuned. Hopefully this does well for us. Again, if you made this fun in the video, feel free to like, subscribe, turn on those bell notifications. I hope you guys are making money in the market in some way, shape, or form. And as always, I will see you guys in the next video.